Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 19th of January, 2022. Thank you for tuning in. Glad to have you guys here. Now, I'm going to get started right away, and I'm going to open up the charts right here and take a look at what's going on. First thing we're going to take a look at is this article here. U.S. mortgage rates climb for the fourth straight week. You know, this is going to start to impact real estate in a very negative way. It says Reuters, the interest rate on the most popular U.S. home loans rose for the fourth straight week last week, with residential real estate borrowing costs now nearly the highest in 2 years, as financial markets anticipate that the Federal Reserve will raise rates sooner and faster than previously expected to combat inflation. You know what? It's simple to me that the Fed is getting themselves in over their head. This is just simple. I can see it. But they feel like they have no alternative, but they're getting themselves in over their heads, you know? And they're going to have to make a turnaround. Now, I'm going to tell you guys a story, you know? Years ago, when I was only, I almost said a kid, but I was a bit older than a kid, you know, but, you know, teenagers act like a kid, and I was still a teenager. I was almost a man, but I was still a teenager. I was like 18 or something, you know. I owned a 23-foot boat. It was a power boat, and it had a 70 horsepower Johnson engine on it, on the back end of it, you know. And it was a nice boat, and I used to use it for fishing in the inland waterway down in Florida, you know. And we used to fish near the mouth of the inland waterway, and it caught some nice fish in there. The water's deep, you know, and the tide, you know, sometimes the tide would be coming in, and the water would be going in through the mouth of the inland waterway. And it was right there on the ocean, and it was like there was like a breakwater there that they had with big rocks and everything that they'd put out, you know, for a breakwater. But out past that breakwater was the ocean. So we were there fishing. My father and there was a few of us there. There was about 4 of us fishing on the boat. It's a big boat, 23-foot boat. You know, it's a fair-sized boat. I think there's 4 of us fishing on the boat, if I remember correctly. I mean, it was a long time ago. And normally I would park near the mouth of the inlet there and not go out the inlet, because I'll tell you, there's huge, huge waves that day out there. The sea was rough. The waves out past the end of the inlet out there in the jetty were like, some of them were 20 and 30 feet high that day, because there was a hurricane offshore, off of Florida, you know. You just don't go there. It's rough. Really rough. I mean, it could capsize my boat. It could sink it. Those enormous waves, you know. So we were fishing there, staying in the safety of the past the breakwater inside the inlet, you know. And we were fishing there, and everything was going good that day and everything, you know. And we were staying in the area of safety, you know, and the tide was going out, and the water was ripping out through the inlet, out into the ocean, out to the, because the tide was going out. There was about probably a 3-4 mile an hour current, maybe stronger, maybe 6 miles an hour current pulling us out, but we had the anchor down. Something happened to my main anchor, which is I can't remember exactly what happened. It was a long time ago, but we lost the anchor, the main anchor, which was a plow type anchor. It was a really good, solid anchor that hold the boat, even with the current coming against it, you know. We lost the anchor, but I had a second anchor. And it was only an anchor. I didn't use it very often. It was only like a 5-pound anchor. It was only a small anchor. And I think it was a mushroom anchor or something. It wasn't a very good anchor anyway. So I threw it overboard and off the stern of the boat. And then I went to try to start the engine because the water was pulling us out the inlet toward the ocean. And it was pulling us really fast when I lost the first anchor, the big plow anchor. It started to pull us really fast. We were clipping right along at the same speed as the water was heading out, and I mean, it was fast. I threw over that little anchor, and it slowed us down a lot. So then I went to try to start the engine, and guess what? The engine flooded. It never used to flood, but this time it flooded. It wouldn't start. I was under taking the cap off the plastic shroud off the top of the engine. What's wrong with this thing? Meanwhile, we were drifting out because that little anchor just wasn't holding us. Drifting out faster and faster toward these big waves. Still trying to work on the engine, trying to get this engine going. Hurry, get me this. Hurry, get me that. Oh. And Pop was getting excited. And the people with us were getting excited because we were heading right out toward these enormous breakers. I mean, these waves were monstrous. And as we got closer and closer to these waves, we could see them coming. The fear went up in all of us, What are we going to do? So, sure enough, we started to hit these big, rolling monster waves. I mean, they were like 20 feet high. The boat was like 23 feet long, but I mean, it was hard to stand up even. But the bow, because we had the anchor on the stern, the bow was hitting the waves and going over the waves, and the current was dragging us out toward the waves faster and faster, and the waves were getting bigger and bigger, and I could see that the monster waves were coming. We were getting there. Waves that could upend the boat even. I mean, these were treacherous. This was a treacherous day, and we were all in big trouble. Well, sure enough, we started to hit the biggest of the big waves, and these were like tidal wave size waves. These were monsters. I imagine they were 20 feet high, cresting at 20 feet high. But the bow was still into them, and it was a rough ride for us. But finally, I got that engine going. The last crank, boom, she started. Oh my God, thank God the engine's going. But I knew that if I turned that boat around at the wrong time, that we would all be swamped and we'd all be lost. So I just let the engine kind of idle. Just idling enough, ready to go, ready to hit the throttle when I needed to. And I waited and I timed it. I seen a little bit of a lull between the waves where I could get the boat turned around before the next big wave would come in. And that's what I did. I turned the boat around, did 180 degrees, pointed back toward the inlet, hauled up the anchor. They hauled up the anchor, the little anchor. And when I seen the wave was right, I timed it just right so that I could get the boat on that wave, on the crest of that wave, and ride that wave in, the inlet. And that's what I did. I rode that wave all the way back in to where we were getting to the point of safety again, back in within the inlet, So we made it back in because we got the engine going. But that was a very frightful experience and a lesson learned for me. At any rate, this is exactly what's happening with the Fed right now. They don't realize it, but they're drifting out towards something that they're not even prepared for. Something that we got multiple bubbles everywhere. We got a housing bubble here. These are like these big waves, and it's gonna start hitting them waves. And the everything bubble is threatening to burst, and they've got to turn this ship around. But let's hope that they don't capsize the boat on us. And that's why I've been saying that this is a very, very dangerous game that they're playing right now with the whole world's financial system. And deflation is fast. It can happen suddenly. Now, China, right now. China is heading toward a real estate crisis. Do you know one of the biggest markets on earth is over $60 trillion. I hear some estimates. Some say it's 70 trillion, some say it's 55 trillion, some say it's 60 trillion, but it's in that ballpark. The Chinese real estate market. It's where they put all of their money, or a lot of it. A lot of their income, a lot of the money. You know where all that money went? They built ghost cities, for crying out loud. Those are all investments. Well, it's starting to cascade downwards, and China is heading toward its Lehman moment. At the same time, now that's going to have a huge impact on the West at a certain point. These are these big breaker waves I'm talking about that the Fed's going to hit. The Fed thinks they got a big boat, but not any boat in the world is unsinkable. Well, let's get started and then take a look at these prices here today. Now here's something else I want to talk about right here. Gold and silver going up. Well, you say, well, Glenn, why is that important right now? Something important happened yesterday, and I was watching it very carefully. When you get the dollar strong, the dollar going up, or the dollar strengthen the dollar, and the DXY, that's a negative indicator for gold. That generally, strong dollar means gold's going to go down, right? Gold and silver. Now, a second negative indicator for gold is when interest rates start to rise. Generally, that is a problem for gold. Interest rates have been rising like crazy on the yield curve the last few days. Yesterday, in particular, it was going up. I think the 10-year made it to like 1.86 or something like that. Something astronomically high like that. Past where I even thought it would go to. And I thought it would rise, but this is a little bit unexpected. It's rising this quick. Still, we have these two indicators, these two strong indicators that generally would make gold go down. The strong dollar and bond rates going up. But no, gold's going up too simultaneously. Well, I find that very interesting. We might be starting to move into a rally in gold and silver where its time has come, where I'm thinking maybe, now this is tentative yet because I'm going on some early little hints out there. These are just hints, but this might be it, guys. Gold and silver might be going into a bull run that might last for the next 10 years. And it might be just starting, might be on the front cusp of it. So keep your eye on this. Let's take a look now at cryptocurrencies today, which are down. 1978 for cryptocurrencies, 1971, so it's still dropping. And we're looking at a Bitcoin price of 41,827. If they get this market crash start to happen and the Fed has to turn around during that period in time, which might last for about the next 16 weeks or couple months until the Fed turns around, this could take a terrible beating. We could see $29,000 Bitcoin instead of $41,000. We could see it go as low as maybe 29, 28. I think it's got a pretty solid floor under it there at that point. But you know what's going to happen after the Fed turns around and changes on their course that they've set themselves on, because they're heading right out the inlet into those big heavy waves. That's what's coming up next. And when they start to get hit by those big heavy waves and they get thrown around in the boat a little bit and they get all wet and they realize, hey, this whole thing could capsize, they're going to turn around. Because they've told you all along, they've said data dependent. This whole thing we're doing is data dependent. Well, the data is going to turn sour, and I mean sour in a big way, and scare them. What do you think they're going to do? Of course they're going to turn around. I just hope they don't turn around too late, and I hope they're careful and know how to turn around, and they don't capsize this boat. Well, there we go. Anyway, 41,000 for Bitcoin. But what's that going to do? On the other side of that, when the Fed turns around, Bitcoin and cryptos are going to go into a bull again, and so is gold and silver. Everything's going to be in a bull. All these items that are out of the dollar and don't have any counterparty risk. See, you guys don't realize, well, some of you do. Shouldn't say you don't realize across the board. A lot of you do realize the importance of counterparty risk. See, all of these assets you think you have in your portfolio, they all have counterparty risk. Stocks, bonds, mutual funds, all this kind of stuff has counterparty risk. Counterparty risk on bonds is the good faith of the United States government, which is actually a broke entity. I mean, they're so far in debt, if it was a company, nobody would want to buy their stock. And that's what bonds basically are, stock in the United States government. So there's counterparty risk associated with all this stuff. But, you know, if you got a little bit of Bitcoin put away in a wallet, you got the private keys, there's no counterparty risk associated with that. There's no counterparty risk associated with a gold coin in your own possession, in your hand, with your hand wrapped around it. That's no counterparty risk. What can you carry through this dying system that has no counterparty risk? That's so important. Anyway, guys, looking at a Bitcoin price, 41,805 today. And we're going to move on here and take a look at the Dow, which is down 46 points right now. Refresh the page, 49 points. That was incredible. It made back those points. You know, that's volatility. But, you know, it's going to start dropping and keep the points off that it's losing. And not make it back with a rally. That's just your dip buyers out there. They're still there. They're still like a bunch of hungry sharks. When they start losing money, you'll see them disappear. Feeding time will be over when they start to lose money. And I mean, you know, it shows there's a lot of them out there that brought back those losses. Anyway, let's take a look now at crude oil, 87.28, and slowly rising. It's rising today at $1.85, or 2.17% up today, getting up near 90 bucks. I told you guys when it was 70, I said it's going to 80. When it was 80, I said it's going to 90. Well, now we're getting up near 90. And I think it might be getting a little bit overdone now at this point, you know. I mean, I'm not sitting here saying, okay, it's 90, it's going to 100. I think it's going to hang around these 80s marks for a while, 80s or 90s, for a little while now, you know. That's what I think crude's going to do. Let's take a look now at the MOVE index, and it's shooting up, 84.63 today. So we're back up in the 80s, heading for 90. That's getting kind of toasty on the MOVE index. Bonds and rates are cooling their heels just a little bit today. U.S. 10 years at 1.83. It's come down 3 basis points. And we're looking at a U.S. 30 year at 2.16. It's come down 2.2 basis points. Let's take a look at the U.S. dollar index today. Oh, we take a look at this, I think. And it's fallen off 95.52. Fell off just a little bit. Thank you guys for listening to my show. What to expect next? Well, it's going to continue to be tight monetary policy, and they're going to keep going with it. See, with me, when I was drifting out that inlet, I knew what I was heading towards, and I was fear. I wanted to get that engine started. I wanted to turn that boat around, and I wanted to head back in the inlet again. But the engine wouldn't start. But I was trying. The Fed, they're heading out toward the big breaker waves, and there's no fear there because they think they're omnipotent or something. They're going to find out when they hit those big breakers pretty soon. It might take a few more weeks, you know, but they're going to keep going until they hit it. Regardless, they're going to see what they can get away with. When they hit it, there's going to be a turnaround. You watch. Catch you guys in the very next show, and you guys have a great day. Bye-bye.